With me today to discuss this further is Moses Yidana. Moses is the head of transfer pricing unit of the Ghana Revenue Authority. He has vast experience in the area of transfer pricing, and Moses provides information to management on multinational cross-border trade for policy making. Moses is a lawyer. He is a member of the Chartered Institute of Taxation Ghana, and he is a member of the Institute of Chartered Accountant Ghana. Welcome, Moses, for making the time.
Thank you.
Also with me is Micheal Boateng. Micheal is a tax partner in KPMG West Africa and the head of transfer pricing unit in the Ghana office of KPMG. Micheal has over 15 years in transfer pricing advisory services to multinationals. Micheal is a member of the Institute of Chartered Accountants Ghana, and he is also a member of the Chartered Institute of Taxation Ghana. Good morning, Micheal, and thanks for making the time.
Good morning, Beatrice. Thank you.
Okay, so Moses will be giving us his perspective as a tax administrator, and Micheal will also be sharing with us his perspective as a consultant. So before we proceed, we would have some housekeeping rules for our audience. We expect this session to be very interactive, and so as the discussions progresses, you are encouraged to drop your questions in the chat box, and your comments and your contributions are equally welcome. So I would like to start with Moses. From where you sit as a tax administrator, how do you think AfCFTA will affect transfer pricing compliance issues?
Thank you, Beatrice, for the question. And as you have put it in your introduction, AfCFTA seeks to create a single intra-African market to encourage movement of goods and services within the African continent. And for that matter, once you are talking about movement of goods and services cross-border, then it brings about the pricing of the goods, and for that matter, transfer pricing. Will the AfCFTA rules affect transfer pricing rules as we have it from the various countries? You will say yes, because there is the impact of, if you look at the AfCFTA instrument, it talks about the pricing of goods within the AfCFTA region, hinging on the rules of origin. The question is that once you are talking about movement of goods within the group, two related parties or two persons in the control relationship dealing with each other for goods, you should be thinking about the pricing being consistent with the arm's length principle. Notwithstanding the fact that the AfCFTA seeks to remove barriers in terms of tariffs and non-tariffs barriers, the rules around transfer pricing will not be derogated. Therefore, though the AfCFTA encourages the pricing of those goods and services to be fairly determined based on the AfCFTA instrument. Therefore, from a transfer pricing perspective, the pricing of these goods within the AfCFTA region will have to comply with the arm's length principle, which is make sure that the pricing that you are moving the goods or services within the AfCFTA region will have to be fairly determined based on the market conditions to ensure that you comply with the arm's length principle. Yes, the transfer pricing rules from the various countries within the AfCFTA region, we have the rules that has been laid down. Yes, although the AfCFTA encourage the movements of goods, and for that matter, the tariffs may be removed, when it comes to related party dealings, the arm's length principle will apply. And when it comes to the various tax authorities in auditing or reviewing these related party dealings, we ensure the various tax authorities will ensure that we respect the AfCFTA instrument. That is what the member countries have signed on will be respected in terms of the pricing of the goods to the extent that they comply with the AfCFTA instrument. In terms of the transfer pricing rules, various members or various customers or traders will have to ensure that their pricing between persons connected will have to comply with the transfer pricing rules in terms of making sure that the price at which the goods or the services is fixed will be consistent as if they were dealing with persons that they are not related to. Then in terms of the compliance with the rules, you have to ensure that the documentation in terms of compliance, filing of tax returns, will have to be consistent with the arm's length principle. So the AfCFTA instrument wouldn't affect the transfer pricing rules, generally speaking, except that when you are doing your documentation as a taxpayer or as a business or as a multinational, you have to ensure that your pricing or any comparables that you are using will consider the AfCFTA pricing. Because if you select a comparable, which, for example, goods that originates within the AfCFTA region, you have to ensure that you factor the fact that these goods were priced within the AfCFTA framework. So you don't compare goods that has been priced within the AfCFTA rules and comparing that to prices, goods coming out of the AfCFTA region. In that case, you may be comparing apples to oranges. And therefore, that is one factor that we need to consider. Then when you come to, in terms of the companies that enjoy the AfCFTA benefit, it may affect their profit. And therefore, from a comparability analysis point of view, the AfCFTA impact has to be considered. So Beatrice, generally speaking, yes, AfCFTA offers a lot of benefits just to encourage inter-African trade and to encourage free movement of goods and services within the AfCFTA region. Yet the transfer pricing rules wouldn't be affected significantly, just that as operators, as tax administrators, we have to consider the impact that the pricing of goods or services within the AfCFTA region probably has enjoyed the AfCFTA benefit, and therefore, in your transfer pricing analysis, consider the fact that the goods are originating within the AfCFTA region, and their prices would have considered the AfCFTA benefits, and therefore your comparability analysis have to be considered such a way that it doesn't affect the pricing and your comparable. So generally speaking, yes, broadly the transfer pricing rules will not change. However, there will be some impact in terms of pricing of goods and services within the AfCFTA region. Thank you.
Thank you, Moses. Indeed, the TP would respect the AfCFTA instruments in terms of pricing, but then the arm's length principle still remains. Okay, Michael, can I have your view on this?
Sure. So thank you, Beatrice. And as you know, my colleague actually indicated, as a tax practitioner, if you take a step back and look at what this whole trading bloc is going to bring to the Africa, the sub-region, I think it's quite enormous. The expectation is that you are going to see a lot of priority areas where you are going to see multinationals are going to really invest within the continent and actually to expand the operations. So you're looking at agro-processing, servicing technology, you're looking at logistics to actually roll goods out, to look at other areas. On the higher side, I think as you rightly indicated, is on transfer pricing, because this brings to mind about the fact that if you look at transfer pricing, and from a tax perspective, this is one key area that authorities within this, all the countries are looking at, just to make sure that we don't miss out. They don't miss out on their, their fair share of tax revenue. Then it brings to mind what are some of the concerns, some of the issues. There was a recent survey which actually emphasized that almost 80% of business leaders are concerned about tax compliance issues. And why are they necessary? They are necessary because of their image, and also they are necessary because of their bottom line. If you make sure that, or if your clients actually believe, or the public trust that you are complying with your tax issues, it gives you some leeway within the competition. Also, if your tax operations and tax compliance are effective, that means that you are able to save from tax penalties and others. So tax issues has become issues which are so important to business leaders, as much as they are even to the business itself, because you don't want to, I would say, pay money or throw money away that you don't need to because of your lack of compliance. And that's my colleague actually indicated. I think this brings to mind the peculiarity of this trade. about the country of origin of the goods and the pricing from a custom point of view. Now, what do we see as tax practitioners? As tax practitioners, I think we'll be making this point over and over about how it is important that companies need to make sure that their transfer pricing compliance are as solid as anything. And when you say transfer pricing compliance, you want to look at as you expand your operations within the Africa region. So for instance, you are in Morocco, you want to expand to West Africa. You are from Southern Africa, you want to come to West Africa or North Africa. Wherever you want to be, as you are expanding your operations, make sure that the pricing among the related party arrangements, whether it is in the form of goods you are going to provide in terms of services and other things, or logistics that you are going to provide, make sure you have proper documentations, you've actually analyzed and assessed them from a transfer pricing point of view to make sure that each jurisdiction transfer pricing rules are complied with. And I think that is where the elephant in the room as a tax practitioner. This block is going to give us enormous opportunities. As you indicated, the largest trading block within the world because of countries and people. But then it comes with its own other areas that we need to look out for. So as a practitioner, and I think as we've been saying from day one, we need to make sure from a transfer pricing point of view, you put in place all the processes in terms of documentation, in terms of pricing, in terms of appropriate processes to make sure that you are taking into consideration all those things to be in line before, as you are rolling out your operation. And I think that is the beauty of, and then the other areas that the transfer pricing brings in terms of the enormous opportunities that we are going to see from this trading block.
Thank you, Micheal. Yes, so as you've heard from the consultants sharing, your documentation should be solid and comply with the various countries you are trading with. Okay, so as promised, we are going to deliver. We are going to roll out a poll. We want to hear from our audience what your thoughts are on the subject matter. So you can see a QR code on your screen now, so you can scan it so that we can hear your thoughts. You get into the questions and we hear your thoughts. If you are unable to scan, a link will be posted on the chat box so that you can also use that to join us. You can also go on to slido.com and key in the number on your screen. So we have about 174 participants. We want to hear from you. What are your views? What are your thoughts on the subject matter? Okay, so we have our first question. Do you think the introduction of AfCFTA will increase transfer pricing challenges in Sub-Saharan Africa? Nope. 100% nope. Okay, now we are having 57 saying, oh, 6. Wow. Okay, it's fluctuating now. So 56 is saying no, and 27 is saying yes. Oh, wow. Okay. We have 50-50 now. 40 says yes. Okay. So 44%, 41% is saying yes and no, and 40, not sure. Okay. 24%. Okay. Okay, so can I have your views, Micheal?
Thank you, Beatrice. And it's quite interesting that the numbers that's coming from the polls. You definitely see that, that is where the danger is. A large, all the attendees, people that we have, saying that yes, some are saying no. And I think that's where the danger is. I think that's the importance of this. Because this is really going to actually expose or expand the transfer pricing, compliance or requirements from this trading block perspective. The reason why I'm saying that is why, as you indicated, companies are going to see this block as an opportunity to expand across the sub-region, trade across Africa. They are going to expand through related parties, because if you have a company in South Africa and they want to expand the operations in terms whether it's services or goods, other things, definitely from a business point of view, it's always proper to have your affiliates that to operate within other jurisdictions on your behalf, because they carry your message, they carry your DNA, they carry your processes. And I think that's where related party issues comes in from a business point of view. Now, when you expand that, the question then becomes, because you're dealing with related parties, then transfer pricing issue comes in, because you need to make sure that the arrangements or the terms and conditions are what we call, some are calling it fair, some are calling arm's length, but the proper term typically is arm's length. So it's good that we're having this resource, but I think I'm happy that we are bringing to bear the possibilities or other areas that business leaders need to think about. That in your quest to expand within the region or the West Africa region or the bloc, this is another area that you should not sleep on, because when it's all said and done, you are likely to have those arrangements. And I think that is where we want to hone in the challenges, the opportunities, and then the risks that we are going to have with all the opportunities that we are going to see from the trading bloc. I think that is, if we live here with this sense from business to business leaders, I think we will see this as a successful program. Thank you.
Okay, I think we should be taking the next poll. Okay, so do you think tax authorities in Sub-Saharan Africa are adequately prepared to address transfer pricing issues under AfCFTA? So, Moses, hear your view. Oh, okay. Oh, the poll has, okay, now there's... Okay, so 64% says no, 15% says yes. Okay, so Moses, can I have your view on this?
Okay, thank you, Beatrice. Which people are saying no, unless they're coming from tax authorities.
Okay.
But Beatrice, the tax authorities within the AfCFTA region, for that matter, the African region, are well prepared. And most of the tax authorities, the AfCFTA Secretariat, working with ITAF.
Okay.
The ITAF sitting in South Africa has been working with the Secretariat based in Ghana with tax authorities to prepare well to make sure that the implementation of the AfCFTA rules is implemented seamlessly without a lot of challenges. So the AfCFTA Secretariat has been working with the various tax authorities, and I can speak for Ghana, the Ghana Revenue Authority, units within the custom division has been created that has been working with the Ministry of Trade and the AfCFTA Secretariat. Systems has been designed such a way that you don't mix them up with the global trading platforms, such as ICAMS in the case of Ghana. So a lot of capacity too has been built to ensure that the implementation of the AfCFTA rules across Africa is seamless without problems. Yes, it is not an event. Issues may come up, but the preparation has been going on right from the conception of the idea until the instrument was signed by the various members. So I think from the revenue point of view, the revenue authorities has put in a lot of work to ensure that the objective of the AfCFTA instrument is not defeated. And so maybe those who are saying no, probably they are not aware of what is happening. The various governments are committed because I think everybody within the AfCFTA region stands to benefit. Even companies that may not be producing, even if you are not producing, the market is bigger. So you can get goods that ordinarily you may not be able to get at a lower price comparatively, where the goods coming out outside the AfCFTA region, which may not enjoy the AfCFTA benefits, maybe priced higher, and therefore you have goods coming from your sister countries, and companies that are producing will have a bigger market. So from the revenue point of view, the benefits are wider for all revenue authorities, and therefore the preparations and with the commitment of governments, revenue authorities are on top of their preparation to ensure that the system or the AfCFTA instrument is implemented so that the benefits that comes with it, all the states will benefit from it. So the preparation, yes, there's a lot of work that has been done to ensure smooth implementation. Thank you.
Thank you. Thank you, Moses. Yes, can we take our next question? Okay. So do you believe businesses are equipped to handle the complexities of transfer pricing under AfCFTA? So our third question now, running. So I want to hear from you, audience. Okay, Micheal. So from your perspective, do you think businesses are equipped to handle this?
Sure, Beatrice. And as the results for the poll actually indicate, a vast majority of the respondents are saying no, around 70%. But that is where I think, as businesses, for your own sustainability and for you to have more or less a sustained business, I think that's where, tax compliance issues become so critical in your planning, in your thinking. From our experience, what we've seen is that because a lot of currently, you see a lot of cross-border arrangements or trading across the continent. So you see a lot of multinationals trading with or dealing with companies within from Europe, from the Americas, Asia. That's what we tend to see. The understanding and what we've seen from compliance and process point of view has been that because transfer pricing has already matured in these jurisdictions, a lot of companies that we operate, even though not from Africa point of view, have built in the capacity and the processes to address that. Now, when you look at when we are going to have an expanded trading bloc, that will force companies to actually trade more within the Africa region because of the benefits from the tax, the levy, the tariffs, and then all those things that will come from it. Now, this brings a new challenge. So I'm not surprised that we are seeing this large number, because now we need to now look at it from an African point of view. So you are going to see transfer pricing compliance being more driven, less from European and then America's point of view, but then from African point of view, because you are now going to see, as my colleague indicated, country of origin, the pricing from customs point of view and others, which may come with its own challenges. And I think as businesses are going to expand, this is an area that needs to be looked at to make sure they are all factoring all these things. And I think that's the beauty of, and then some of the challenges that will come from the benefits that we are, talking about from this trading bloc. So I think that's what we are seeing. Thank you.
Thank you, Micheal. Okay, thank you. So we are zooming into the main discussion. Moses mentioned earlier on something about comparables, and I wanted to just know how would the lack of comparables, local comparables in the sub-region affect the implementation of AfCFTA?
Thank you, Beatrice. Yes, the lack of comparables within the transfer pricing landscape is a global challenge, not just an African issue. And so far as AfCFTA is concerned, the lack of comparables shouldn't be an issue. I believe that the AfCFTA Secretariat, working with the various revenue authorities, the custom divisions, are working on that. And as I indicated earlier, systems has been put in place to ensure that the evaluation of the goods, the rules of origin, has been properly, designed and for implementation. So from the AfCFTA point of view, the pricing of the goods within the rules that has been specified within the AfCFTA instrument obviously will be taken care of by the various custom divisions. And for that matter, it shouldn't be a problem. From a transfer pricing perspective, the lack of comparables within the African region, I believe that the ITAF working with the AfCFTA secretariats and the various revenue authorities have been working on that to ensure that just as has been done in Europe and other parts of the country, we try to harmonize our rules such a way that when it comes to comparing to make sure that the pricing is within the arm's length rules, you easily can eliminate any challenges. And therefore, there are work that has been done and is still ongoing on to ensure that the getting comparables for transfer pricing purposes within the AfCFTA region is addressed. And yes, comparability is at the heart of transfer pricing, and therefore, if you don't have comparables, you may have challenges. But then that has been the general problem with transfer pricing, even in Africa. But so far as the AfCFTA instrument is concerned, we shouldn't have a peculiar problem with the implementation of the AfCFTA, other than the general transfer pricing challenge of lack of comparables. So I believe that with the work going on within the AfCFTA region, when it comes to the goods that are moving within the intra-African region, we should be able to come out with clear rules in terms of determining the price such a way that the arm's length principle is not breached, and we do not use the arm's length principle to defeat the object of AfCFTA, because it is good for Africa, the free movement of goods, the economic trade. We need that because we have a bigger market, and therefore we should take advantage of that. So lack of comparables within the AfCFTA region shouldn't be a problem. The issues around harmonization of our rules and coming out with clear guidance is being worked on, and I believe that we should be able to address those challenges. Thank you.
Thank you, Moses. Michael, would you want to comment on that?
Sure, Beatrice. If you take a step back and look at this, this has been an issue that has actually been with us since transfer pricing actually came into being. That is comparables. So the purpose is what are the comparables, and as my colleague indicated, if you want to make sure that the transaction among you and your related parties are fair, we need to find similar arrangements or comparables or companies who are doing similar products, how their pricing is. So therefore, if unrelated parties' prices are very similar to yours, then it is deemed or is considered as fair or as arm's length. Now, currently, even if you look at what is being practiced within the transfer pricing within Ghana and other African countries, in the absence of local comparables, you see that we rely on European comparables and other jurisdiction comparables. Only thing is that sometimes when you look at them, you need to make country risk adjustments or some tweak them just to suit your jurisdiction or your economies and others. So I think from where we sit, this wouldn't be a challenge, but we foresee that as time goes on and there's expanded, expanded trade among countries, subsidiaries or related parties across across the country or across the continent, we are now going to find the availability of comparables. Now, there will be expectations that there will be increase in data. That you see that third parties will be able to have data of companies that are trading within the sub-region, especially because they are available now, which can be used as comparables. So we expect that in the long run, this issue will be minimized from African point of view. And I think that is a challenge that we have been having from Africa. And I think even with the advent of this trading bloc, this issue is likely to unexpectedly actually be addressed, because now we're going to see expanded trade among companies within the African continent, which will make it data available to say that these are comparable data for peculiar to Africa. So that is, from a tax perspective, that's advisor point of view, that's what we see. Thank you.
Thank you, Michael. So there would not be any challenges in terms of comparables, and we are hoping to have our own comparables in the near future. Thank you, Michael and Moses, for that, for your sharing. Moses, I would like to come home a little. So how would the implementation of AfCFTA affect revenue, GRE, in raising their revenue? As we know, they are going to be, after the tariffs are going to be reduced among the states to encourage this instrument. the implementation of this instrument, and in which case we'll be losing income from the customs arm of the Ghana Revenue Authority. How are we going to manage?
Thank you, Beatrice. Yeah, Beatrice, the implementation of the AfCFTA instrument, I wouldn't agree that it's going to reduce revenue. If you look at it short term, you may think that. However, if you look at it broadly and long term, obviously revenue will increase. And therefore, you don't have to look at it with a short term effect. If you look at the analysis that has been made, revenue for the tax authorities, and for that matter, the Ghana Revenue Authority, at the end of the day, the revenue is going to increase, I would say significantly, from a bigger market. Unlike in the past, prior to the coming into effect of AfCFTA, the revenue numbers probably would have been lower than if we implement the AfCFTA rules well, simply because you will have now a bigger market. The barriers that hitherto was affecting free movement of goods within the African region obviously would have been lowered, if not eliminated totally. So I believe strongly that AfCFTA will increase revenue to the tax authorities at the end of the day, because you take a typical Ghanaian company, manufacturing company, it will have a bigger market to export its goods, and for that matter, will have more revenue coming in. You have other goods coming from other African countries, which in the past, I mean, because of those unnecessary barriers have been taken away or would have been eliminated or reduced. So you have goods coming in, and it encourages trade. The volumes of transactions goes up, and for that matter, revenue at the end of the day will increase. If you look at it short term, you may think that way, but the numbers doesn't show that. AfCFTA will obviously improve on the revenue generation for tax authorities. So it is a good thing, and that is why all the signatory countries are working hard to ensure that we reap the benefits with it. I think we stand to gain than to lose as Africans, and therefore we have to give it the necessary support. And there's no doubt that the numbers in terms of revenue will grow from the AfCFTA instrument. Thank you.
Okay, so we stand to benefit more than we stand to lose. So after all the way. So Micheal, how do you think technology can play a role in improving the effectiveness and efficiency of transfer pricing compliance in Africa?
Thank you, Beatrice. And I think if you look at how transfer pricing actually, is being administered from a tax administration point of view, and also from tax practitioner point of view, and also from a taxpayer's point of view. If you look at all these three angles, you see that everything comes back to efficiency, availability of data, availability of reliable information, and lastly, availability of accurate information. All these things we all know can be effectively executed by availability of technology. And that is one of the key things that we expect to see. So you see that now, digitization, everything across the region, expansion of ERP systems in terms of making data available from various aspects, you are likely to see that. Now, if we come to KPMG, we have the KPMG Gateway, one of our technology tools, which actually helps in transfer pricing compliance, in making sure that there's availability of data, of cross-country data, in terms of pricing, that you can sit at the comfort of one single place or dashboard. Then you can look at how pricing is done within each jurisdiction. You can now see how goes the pricing of goods and all those movements within each country. And then I give you a sense of whether the pricing are even as planned according to what your policy is saying. So it all comes back to technology. And I think as we are seeing the advent of this trading block actually expanding operations, we as businesses and we as advisors should now look at technology as the platform or the way solution to actually make complying with this all these requirements very seamless. You don't want to, as a business, just use processes that are not going to give you value for money. And that's where technology or effective technology will definitely be used. And as I indicated from KPMG, we have all the use key tools, and I think we've seen it across board. It's really helped. It brought transparency. It has brought visibility, and I think that's something that we can, can be copied or can be used across board. You look at the Revenue Authority's point of view. Availability of technology actually helps, and I think Moses has already alluded to that. If you go to GRA now, and I'm talking to GRA, I know GRA has so much information that you can even think about. What it does is that it actually brings a lot of transparency. It brings certainty. It brings equity discussions on tax issues. And I think that is the beauty of what we are looking at. So technology is going to be the driving force in almost everything from a tax perspective, compliance, planning, and other things. So I think that is our view. Thank you.
Thank you, Micheal. Indeed, technology is going to be the driving force. I want to go to Moses on this one. As you already stated, AfCFTA should not affect transfer pricing so much. If companies are able to do their documentations and their compliance very well. But is there any specific requirement that you think that AfCFTA would bring to fall for compliance for taxpayers, for companies to comply in terms of due to this implementation of AfCFTA? Is there any specific rules or issues you think that AfCFTA would bring up?
Yeah, thank you, Beatrice. As in your introductory remarks about what AfCFTA seeks to do or to achieve, basically to create a single market to encourage or promote trade intra-Africa. In terms of the taxation, if you look at the instrument, there are not much rules around taxation other than the tariffs and non-tariffs barriers that will be lowered in terms of the pricing of goods hinging on the rules of origin to ensure that we promote the trade within Africa. From a transfer pricing rules perspective, there are not going to be any new rules within the AfCFTA region other than ensuring that there are fairness and then consistency in the pricing of the goods that are moving across borders within the AfCFTA region. So there wouldn't be new rules per se coming out of the AfCFTA. Yes, but moving forward, I believe that the various member states will look at, as I indicated, harmonization to ensure that we limit differences in terms of the various rules, and therefore ITAF, leading the pack on this area, will look at harmonizing in such a way that within Africa, our transfer pricing rules are harmonized to avoid differences in the application of the rules. So there wouldn't be different transfer pricing rules emanating out of the implementation of the AfCFTA instrument. Otherwise, the instrument itself makes rules to ensure that we don't have differences. The tariffs within the AfCFTA region are going to be harmonized, and the systems are such a way that there's consistency. When you are clearing goods, in Ghana, as against when you are clearing similar goods in Kenya or Nigeria, the rules are harmonized such a way that you don't have differences. So from a transfer pricing perspective, there wouldn't be new rules, just that the various tax authorities or multinationals has to ensure that the arm's length rule is respected within the AfCFTA tariff rules that is guiding the pricing of the goods. We will be considering that, yes, this pricing is within the AfCFTA region, and therefore, for transfer pricing purposes, you have to bear that in mind, such a way that you do not distort your analysis. So there wouldn't be new rules coming out of the AfCFTA implementation from a transfer pricing perspective. Just that in your transfer pricing analysis, you have to consider that the tariff regime is within a specialized AfCFTA region. And in any case, from a transfer pricing analysis purposes, most institutions use the FOB, and therefore, or the factory pricing. And therefore, the tariffs that comes after a second layer may not be an issue. Otherwise, most transfer pricing analysis will consider that, yes, the pricing of the goods that you are talking about or the services happen within the AfCFTA region, and therefore, the effects of the AfCFTA benefits have to be taken care of. So there wouldn't be new rules, just that we respect both the tax authorities and the multinationals will respect the transfer pricing rules as well as the AfCFTA rules as enshrined within the instrument. Thank you.
Okay, thank you. So no new rules, just respect the rules in the instrument and the old transfer pricing rules. Okay. So Micheal, from a consultant point of view, how does the impending pillars of Pillar 1 and Pillar 2 affect transfer pricing under AfCFTA?
Thank you, Beatrice. I think this is a very interesting question. This will definitely, be a game changer, from the trading implementation of the trading block and transfer pricing across the globe. So, what is the Pillar 1, Pillar 2? If you all take a step back, we all know that a couple of years ago, the OECD countries actually came up with the base erosion, profits, shifting, and they came up with rules and other things just to make sure that there is fairness in terms of to avoid mispricing and to actually help transfer pricing misuse. Now we have BEPS 2, which is talking about the Pillar 1, Pillar 2. Mm-hmm. Now, if you look at the two pillars, the Pillar 1 focus on making sure that they actually go further to address inequality in tax payment or shifting of profits across jurisdictions. One, from a digital taxation point of view, that's those who are operating in the digital space. The Pillar 1 will address that. That's under Amount A in Pillar 1. Then Amount B actually talks about more or less streamlining certain related party arrangements. They're looking at distribution and marketing. So if you come to Pillar 1, when you're looking at from a transfer pricing point of view, and that is streamlining or having a consistent approach in terms of distribution and other businesses which are very common within transfer pricing issues. That means that the Pillar 1 will actually make sure that there is certainty. Pillar 1, that's Amount B, will address the issue of certainty when it comes to that. That is the certainty in terms of the pricing of certain key transactions that are talking about the distribution, and that is, which is one of the key common business arrangements that we will see. The other aspect is also the Pillar 2, where we are looking at minimization, minimum taxes across the jurisdiction, so that you are going to have maybe around 15% effective tax rate, so that those who are, if we come across that there are payments, taxes are being paid lower within certain jurisdiction, you have a top-up tax. Yeah. So if you look at both the Pillar 1, Pillar 2, that's what it seems to address. Now let's bring it within the context. Now, if African countries at some point adopt or sign up onto the Pillar 1, Pillar 2, okay, and then make sure that it's going to work effectively, then a lot of the uncertainties that we are going to see from the increment of businesses within this region will definitely address. Because if you look at when it comes to Amount B and the Pillar 1, about the pricing of the distribution and other retail arrangements, which the Pillar 1 Amount B is trying to harmonize or streamline, saying that this is the safe harbor. That's why if African countries adopt that, then that means that will take care of the compliance requirements, the amount of work that will be used, in documentation and others from a transfer pricing point of view. And when it comes to Pillar 2, that is where the minimum effective tax rate is also can be addressed. So if you take a step back, these are some of the things that from a broader point of view, if with the advent of the Pillar 1, Pillar 2, when the trading block, actually kicks in effectively, and most of African countries actually sign up, this was supposed to address that. However, remember there have been a lot of concerns from a lot of African countries as to whether they should even adopt these pillars. Because if you look at it, some of them are actually not to the benefit of most of African countries. So that's why they've been a slow, pace in adopting that. But in the recent discussions, I've seen that the OECD is actually making room for some of the concerns from the African countries, just to give them enough room to actually address that. So if you take a step back, if Pillar 1, Pillar 2 is adopted at some point, and the block actually becomes effective, and with the expansion of business, this will actually help with business certainty, because every businessman wants to make sure that we have adopted this, and then there's going to be certainty, it's actually going to help me to actually expand this countries. I think that is one thing that we should also be mindful of. Thank you.
So, Moses, would you want to comment on that?
Yes, thank you, Beatrice. Will Pillar 1 and Pillar 2 implementation affect transfer pricing? I would say yes, somehow. If you look at the rules on Pillar 1 and Pillar 2, which are more mechanical in nature, unlike the determination of profit based on the transfer pricing rule, which hinges on the arm's length principle, such a way that in the determination of the profit of a multinational, you apply the arm's length rule such a way that the related party dealings should have been conducted within the arm's length principle to determine the profit. Under Pillar 1 and Pillar 2, there are mechanical ways of determining the profit or the income that should be subject to tax. For example, you have the minimum rate of 15%. For that matter, it is not determined based on the arm's length principle. It is more mechanical in nature, and therefore it tries to derogate the arm's length rules, unlike in the past where, prior to the implementation of Pillar 1 and Pillar 2, where you can say, for example, a company profit from a TNM approach is so high or is so low. If you apply the Pillar 1 and Pillar 2, there's a mechanical way of determining the profitability of the company, irrespective of the transfer pricing rules. So if African countries, I know some number of countries has taken the lead, we begin to apply the Pillar 1 and Pillar 2 rules, especially Pillar 2, with the globe rules, very complicated computation that goes into that. Obviously, the transfer pricing rules will have to, there are some areas that has to be relaxed, and what that means is that some of our DTAs will have to be renegotiated. However, if you look at Ghana per se, some of our major areas that we get our taxes, for example, the extractives will not be included within the Pillar 1 framework, especially the Amount B. Most of our taxpayers wouldn't meet the minimum requirements. So, for example, you are talking about 20 million euros annually. Most of our multinationals within Africa may not meet, especially in Ghana, wouldn't meet these requirements. You have extractive companies, which are totally excluded from the Pillar 1. Then you also have financial institutions, regulated financial institutions, also excluded. And so if you look at these three exemptions, for example, the minimum turnover, annual turnover, which is quite huge, most of our taxpayers will not be affected. The area that we get more revenue from extractives will not be affected. Then even Pillar 2, the global turnover of 750 euros, a lot of African multinationals wouldn't even meet this. Although Pillar 1 and 2 obviously comes with, it will affect the transfer pricing rules because of the mechanical nature of how profits or taxable income is determined. Notwithstanding that in Africa, the impact wouldn't be that much, except countries that will go for the digital taxation rules and the minimum tax rules, as countries like Africa and South Africa has taken the lead. But I believe that yes, Pillar 1 and 2 have impact on transfer pricing rules. But as to what individual countries will adopt locally or domestically would depend on what the individual countries will do. Thank you.
Thank you. Thank you. So our next question. So I will start with Moses.
Okay.
So how do you think the lack of harmonization of transfer pricing regulations across Africa would be addressed to reduce uncertainties? Micheal mentioned that Pillar 1 and Pillar 2 would clearly bring everything to a level. There wouldn't be much conflict if we adopt Pillar 1 and Pillar 2. But in the meantime, whilst we work on that, how do you think disputes would be addressed?
Okay. Thank you, Beatrice. In terms of addressing of disputes within the AfCFTA region coming out of the AfCFTA instrument, if you look at the instrument, dispute resolution measures has been prescribed, and most of the revenue authorities has been dealing with each other even prior to AfCFTA, and then the ETAF on board, and with the instrument puts in place dispute resolutions measures, such a way that a committee in place to ensure that dispute resolutions are addressed as and when it arises. However, the dispute resolutions wouldn't veer off because it's going to be working within a scope as prescribed by the instrument in terms of the determining the tariffs, if any, the rules of origin and others within the AfCFTA instrument. So the dispute resolution measures has been provided within the instrument, and various, because it's not a one-stop, as the instrument is being implemented, experiences will be learned from the implementations. Various measures will be taken to address things that will come up out of the implementation. So dispute resolutions, the measures has been put in place. However, it's going to work within the confines of the instrument. It's not coming in to replace the existing dispute resolution measures that has been put in the various legislations. Like in our case, we have our dispute resolution procedures prescribed in the Revenue Administration, which starts from internal within the Commissioner General determining if there's any dispute. Then it moves to the Independent Appeals Board. If the dispute is not addressed there, then before you go to court. So these dispute measures that has been put in place by the various legislations within the AfCFTA region will apply. However, within the AfCFTA framework, there are various dispute resolution measures that the Secretariat put in place to the extent that is within the implementation of the AfCFTA instrument. Those dispute resolution measures have been put in place, and the issues of making sure that there are coherence and then the transfer pricing within the region. Obviously, most of us are tilted towards the OECD rules. That differences it's not that much, but I believe that as we progress with implementation of AfCFTA, will become a single market, will become more integrated, and some of these things over the period will be ironed out. Yeah, thank you.
Yes. We'll be taking a break in 5 minutes. But before we proceed on break, let me pick Michael's comment on that question. How do you think disputes will be managed whilst we wait to adapt the Pillar 1 and Pillar 2?
Sure, Beatrice. I think this is one area where, as a practitioner, you tend to see transfer pricing. I think if you take a step back and look at it, each jurisdiction is looking at transfer pricing issues from the mirror. So that when a regulatory authority make an adjustment in one country, the expectation is that the other country would have a similar arrangement so that the taxpayers, from a group perspective, doesn't suffer. I think that's one of the key important things from a transfer pricing point of view. Now, if we're able to have a very effective mechanism, because as a trading bloc, the expectation is that we are now going to help enhance trade among each country to actually help double our GDP, increase revenue, employment, and everything. This is another aspect that we need to seamlessly actually implement and ensure that all bottlenecks are addressed in terms of exchange of information, harmonization, working within across the jurisdiction. If you look at our DTAs, the expectation is that maybe a DTA between Ghana and the United Kingdom or Germany, there are dispute resolutions sitting in there. But the question is that how effective has it been in addressing disputes from a tax perspective? And I think we should all learn from some of the challenges that we've seen and make sure that we bring them into the African continental trade, block that we are looking at, because that will become one of the key challenges. And I think it will actually enhance, or it will be one of the key pillars for the success of the trading bloc, which is so important that leaders and decision makers will have to also look at, just in their quest to actually roll out this bloc. This is something that needs to be looked at from a customs point of view, which is the instrument is looking at, and then also from a transfer pricing point of view, to consider that all those things are working seamlessly.
Thank you, Michael. Thank you. Yes. So we'll take our last question, then we can go on break. So I'll start with Michael. Do you believe AfCFTA will promote a better cooperation between and among tax authorities in the sub-region?
Absolutely. I think if there's anything that we're looking forward to that actually will address or actually help, the cross jurisdiction working together from Africa point of view, I think this is one of the, that would be a game changer. If you take a step back, currently we have all the trading blocks. You have ECOWAS. When you go to South Africa, they have their own. You go to Eastern Africa, they have their own. They sit within each sub-region, and how they are even working has been a challenge. We all, I mean, if you look at the ECOWAS treaty and all those mechanisms are in there, and I think some have worked, some haven't worked. But I think when we are going to have an expanded trading bloc with a lot of benefits, and then we have Africa, the African Tax Authority, actually, a body of African tax authorities, all the working together, sitting in there. That should be, the catalyst or the platform for this to work. And my expectation is that this should be the game changer to make sure that we in Africa, we're actually using all these treaties and other things that we have from our various destinations. As I indicated, we have ECOWAS, we have all the others, blocks within the various distance. Now we have a bigger pie, we have a bigger pool. How do we make sure that it's effective? But those things are not just there for decoration. They are there to make sure that we expand this content. I think that's what we are looking at. Yeah, thank you.
Thank you. AfCFTA would be a game changer and for us to cooperate more in our revenue collections. Thank you so much, Michael and Moses. We'll be going for a break in 2 minutes. I think at the top of the hour 10, we'll be going for a break. When we get back, we'll be taking your questions. So send them in, we'll be taking them, and we'll have more conversations around our topic. Thank you so much for joining in, and stay tuned.
There is a popular African proverb that wisely states, "Until the lions have their own historians, the history of the hunt will always glorify the hunter." And there is no better way to demonstrate this than using the following. These are snips from newspapers and other broadcast media around one of the foremost communications companies in Nigeria. And they tell a negative story. In the next screen, you can see a very positive narrative from the same company. It is noteworthy that these screens are only a month apart, with some of the negative reports in March 2022 and the positive reports in April 2022. What changed in just 1 month? Another intriguing story comes from a wildly circulated social media image. It led to various interpretations, turning everyone into a tax expert. People were puzzled by how one entity managed to pay more taxes in 1 year than all the banks in Nigeria combined. The real question is whether this is the true picture. How does it impact the public's perception of these entities? What story is conveyed when such information becomes public? Equally important is understanding who is crafting the story and communicating these narratives. This is why we always say that at the end of the matter is that the story is told right all the time. It underscores the need for taking responsibility in communicating your tax affairs and matters, ensuring that your story is always communicated accurately. Tax impact and transparency reporting provides the avenue through which you take personal responsibility for how your tax affairs are communicated to the public and that your story is told right every time.
So we are back again. So before we proceed again into our discussions, we'd want to hear from our audience your thoughts about the discussions so far. So a poll is being rolled out again to hear from you. Okay, so as usual, you can scan the QR code. Okay. Yes, so do you believe AfCFTA will promote better cooperation between and among tax authorities of contracting states? Okay. %100% yes. So indeed. Okay, so can I have your take on this, Moses?
Do you believe that?
Do you believe AfCFTA will promote better cooperation between and among tax authorities of contracting states?
Beatrice, the result speaks for itself.
Okay.
That even the design of the instrument alone, the putting the systems that are being used to come out with the rules of origin, the tariffs alone, there are working groups that were put together, and the revenue authorities become more closer and closer. The implementation needs a lot of cooperation and coordination and harmonization. So obviously the result speaks for itself that it's going to bring African tax authorities together, because you need to work together to get this thing implemented. A single market, obviously, it can only bring cooperation. So the result speaks for itself. Thank you.
A single market can only bring cooperation. So Micheal, your thoughts on this?
Yes, so I think it's quite, interesting with the results. It speaks for itself. I think what I'll add to what my colleague actually indicated is that this is going to create the platform for this continent for the first time to be able to, from an economic point of view, to actually facilitate the expand this trade. I think there should be deliberate efforts from authorities, the decision makers, and this, with the commitment to ensure that we work together. Because when we work together as tax authorities from each jurisdiction, then we are going to reap the benefits individually or from an individual country point of view from this trade benefit. I think I support with the result that is coming from the respondents. Thank you.
So there's a mutual agreement between the consultant and the tax administrator. There is going to be cooperation among tax authorities of contracting states. Okay. We can move on to our next question. Do you believe the AfCFTA will drive harmonization of transfer pricing laws in the sub-region? Do you believe? Audience, we are here. We are waiting for you. Drop in your questions as well. We'll be taking them. Your comments, your contributions, we'll be taking them soon. We have 227 audience. What do you think? Okay. Oh, okay. All right. So, Micheal, let me take your thoughts on this one.
Thank you, Beatrice. So, as I indicated earlier on, you see the majority are saying yes, and as I've indicated earlier on, this will become, one of the best opportunities from a transfer pricing regulatory point of view, that there will be a lot of discussions, harmonization, especially harmonization of arrangements, and then also from dispute resolution and others. So I think this will definitely, bring, the expected results as we are seeing from the results, and as my colleague actually also indicated earlier on. Yeah.
So Moses, coming back to you again.
Yeah, Beatrice, the yes have it, that it is possible that after implementation of AfCFTA may bring about harmonizing our transfer pricing rules. I think that the African Tax Authorities Forum has been working at it to see if we can have a database for African comparables, and therefore it is possible that the implementation of the AfCFTA instrument could generate interest and, for that matter, driving, harmonizing our transfer pricing rules, especially when it comes to comparables within the African region. So it is possible. The results clearly gives an indication that the AfCFTA secretariats working with ITAF, that is the African Tax Authorities Forum, it is possible that it can trigger that, because the systems that has been put in place by the AfCFTA secretariats working with custom divisions, putting in place those systems can be the starting point that we may be able to harmonize our transfer pricing rules. When it comes to goods and services within the AfCFTA region, it is possible that we can, going forward, harmonize our systems in terms of transfer pricing rules. Yeah.
All right, thank you. It is possible that we would be able to harmonize our transfer pricing rules within the sub-region. Thank you so much, my resource persons. So we pick our audience, their questions, and see how best we can address them. So question 1 is asking about how does the implementation of Pillar 1 and Pillar 2 affect the AfCFTA within the context of transfer pricing. I think that has been taken. You can go back and view this session when it is rolled out on our social media handles, and that would be answered to you. So we have a question from LinkedIn. How could AfCFTA-driven regional economic clusters impact transfer pricing strategies? And what guidelines will be necessary to support fair profit allocation? Should I take that again?
Yeah.
So how could AfCFTA-driven regional economic clusters impact transfer pricing strategies? And what guidelines will be necessary to support fair profit allocation? So Moses, let me hear from you.
Yeah, thank you, Beatrice, and the question. I thank you for that question. Yes, the AfCFTA rules, as I have been trying to encourage the free movement of goods and services and capital and investments across Africa, wouldn't impact significantly the transfer pricing. The allocation of profits obviously is driven by where the value is created, and for that matter, where the economic activity takes place. And therefore, allocation of profit obviously has to go to where the value is created. And that would not be derogated by the AfCFTA rules. The AfCFTA seeks to reduce tariffs and non-tariffs barriers, ensuring that prior to the AfCFTA instrument, tariffs, which can be a bigger barrier, is minimized. The harmonization in terms of pricing of goods within Africa is within the AfCFTA rules, and therefore that wouldn't affect allocation of profit. The rules based on the various tax regulations in the various countries will still apply. The transfer pricing rules, which is driven from the international rules, i.e. the OECD guidelines, the UN conventions, in terms of profit attributions, will still apply. And therefore, the profit attribution will be driven by where value is created, for that matter, where did the economic activity takes place. So those rules will obviously determine where profit is allocated. Yeah, and the pricing of goods within the AfCFTA region will be guided by the rules of origin and others as enshrined in the instrument. In terms of allocation of profit, would obviously hinge on where value is created, for that matter, the economic activity, where it takes place. Thank you.
So value, the allocation of profit will go where value is created. Michael, can I have your thoughts?
Sure, Beatrice. I think from a taxpayer or tax practitioner point of view, I think this is something that we've seen has been, should I say, a challenge to a lot of companies or taxpayers in terms of complying with transfer pricing rules, even as it is now. If you take a step back and look at it, transfer pricing rules or transfer pricing compliance or transfer pricing strategies shouldn't just be left by just having a local, having a policy around it. But the question is, how effectively are you actually implementing that and monitoring it on a day-to-day basis, just to ensure that what you said is supposed to be is actually what it's supposed to be. I think that's where the challenge has always been. Now, if you are going to have classes of within the region, whether it's classes or business operations from a strategic point of view across each jurisdiction, the question is that how do companies ensure that within each jurisdiction, let's say maybe you have a company subsidiary, a company headquartered in, let's say, South Africa, Nigeria, Ghana, operating in Togo, Nigeria, Burkina Faso, Mali, and other countries. How do you make sure that your transfer pricing strategy or processes are effectively executed? And that is where transfer pricing decisions or processes needs to be brought up and say, look, we need to make sure that we actually allocate as much resources, ensure that we are monitoring, we are revising, we are reviewing, and we are actually implementing what the policy is saying. What you've seen is that you can have a policy sitting on the shelf, and you only pull it out a year, but then the resources to ensure that on a day-to-day basis, pricing among related parties, whether it is services, remember, the trading block is not just looking at only goods, it's looking at various aspects. So you see it's goods, services, persons, capital. These are very important issues that the block is actually looking at.
Yes.
So that if you're looking at services, you're looking at goods, you're looking at all those things, how do you make sure that you have the strategy and from a transfer pricing point of view to monitor and ensure that you're executing everything as expected? Are you allocating the right resources? Are you allocating enough resources? Are you actually seeing the importance of transfer pricing as a key risk in your business process, your business survival, sustainability? This is what we are looking at from this the question that you raised. Thank you.
Thank you, Micheal. But since you mentioned services, somebody have asked a question with regards to services. So how would the pricing of services be harmonized, knowing that the different countries have their own approved scale of fees for services?
Yes, so if you take a step back, this is a country-specific issue that we've seen across the African countries. You see it from being all the rules, looking at them from a forest point of view. Unfortunately, they've actually control of forests and others have actually found its way in transfer pricing. So I think that is where the challenge has been. But what we've seen over the years in Ghana, other countries, Nigeria, other countries has been that these laws, as I indicated, have always been driven by forest outflows and forest management, but not from a tax perspective. So the key rules of transfer pricing, as my colleague indicated, where are the value created? Where are the what is each party contributing? How do you make sure that you are allocating the risk, the resources? You are looking at this, the what do you call it, the functions, the risks that each person is bringing in or suffering, the resources that each entity is actually bringing on board, and the function they are performing. How do you make sure that you are properly allocating the benefits and the cost to each of them? I think that has been the challenge. So it's not going to go away. It's going to be the same as we have. We are going to make sure that the proper allocation and other things in terms of resources, in terms of risk, in terms of others are actually addressed from that point of view. Thank you.
Okay, so proper allocation of profit from value created is going to resolve the issues of scale of fees from different countries. Thank you. Good morning, team. How is AfCFTA able to meet with sustainable development goals through this collaboration? So I'll take Moses' view on this first.
Okay. Yeah, so Beatrice, the AfCFTA rules as has been implemented is targeted with an objective. In your intro, you mentioned of the single market to encourage trade, but within the AfCFTA rules and the various individual countries' domestic laws, those international provisions to ensure that those objectives are achieved is within the various domestic laws to ensure that the various schemes, as everybody is working at, to ensure that we achieve that, is within the AfCFTA rules and the various domestic laws. So the SDGs, most of this tax to achieve SDGs is part of that. And the AfCFTA region, the free movement of goods and services, within that, every individual country has considered that what is the impact of the rules as we have it in the AfCFTA region will impact the SDGs. We need to eliminate poverty, have good drinking water, good health, and there is a link between tax and most of the SDGs. Yes. And therefore, even within the AfCFTA instrument, the SDGs, every country is working the achievement of the SDGs. There are various 13 of them. If you look at each of them, most countries are working at that. And there are multinational instruments to ensure that we achieve the various SDGs. And to the extent that we are having a bigger market, we are encouraging the compliance with the international conventions to ensure that we achieve the various SDGs. These are embedded in the instrument. So I think that it will help the various countries in achieving the various SDGs as been described. Thank you.
Thank you, Moses. So the Sustainable Development Goals is embedded in AfCFTA. Yeah. Micheal, your take.
Sure, Beatrice. I think if you look at all the Sustainable Development Goals, as my colleague actually indicated, it's actually hinged on the sustainability of our human race, the earth, businesses, and human beings as we are. So here we are looking at health, we are looking at the environment, we are looking at sustainability of government self-financing, we are looking at girl child education, we are looking at health and others. And I think this is so key. Now, if you look at this African trade bloc that we are looking at, the expectation is that it's going to expand the movements of goods and services, it's going to expand businesses. It's also now going to, as my colleague indicated, this trading bloc is not going to reduce taxes for, to governments. It's now actually going to increase tax revenues to government. And how? You are now going to see that even though we have streamlining the tariffs and the custom duties and others, we are now going from another aspect. You're going to see increase in businesses. The expectation is that business revenues and individual revenues, employment revenues are going to increase. We are going to see expansion of business others that will actually expand business revenues, individuals, and other things, which will definitely trickle down to government getting more tax revenues. So if you look at this very well, if you're able to effectively execute this trading bloc, we are now going to see a lot of the key aspects of the 17 SDGs actually being addressed. So we are going to see government self-sustainability. Now governments are going to borrow less because they are getting more revenue from taxation to actually fund the operations. We are going to have more companies being transparent and declaring profits and being compliant to taxes, because that's one of the key requirements. We are also going to see expanded education, because now governments are going to have money to actually finance healthcare. These are key things that we see that if we are able to effectively execute this, these are some of the benefits that we are going to see, which will actually meet the 17 SDGs as the UN actually is promoting. Thank you.
Thank you, Micheal. So effective implementation of AfCFTA will indeed amplify the Sustainable Development Goals. Thank you so much. And I think we have our last question now. Are there specific punitive measures So are there specific punitive measures recommended by AfCFTA to multinationals that abuse transfer pricing rules? So I think he wants to say that are there specific punitive measures recommended by AfCFTA to multinationals who abuse transfer pricing rules?
Yeah, Beatrice, thank you for the question.
Yes.
And the questioner. Yes, the AfCFTA instrument does not prescribe rules for transfer pricing, obviously. However, the various domestic rules on transfer pricing prescribe the penalties for multinational that abuses transfer pricing rules. So this obviously is out of the scope of the AfCFTA rules.
Okay.
And the various countries have their transfer pricing rules and the penalty regime for persons that have fall foul of the rules. So this appears to be outside the confines of AfCFTA. However, the AfCFTA instrument prescribe rules for, multinationals that may fall foul of the AfCFTA rules, but not transfer pricing. In terms of transfer pricing, the individual country have their transfer pricing rules and the accompanying penalty regime. And therefore, depending on where the violation happens, the applicable rule within the countries, the contracting parties, the transfer pricing rules, and their respective amnesty penalty regime will apply, but not within the AfCFTA rules, because transfer pricing is not within the AfCFTA rules. Just that the AfCFTA rules encourages free movement of goods and services, and then in terms of the pricing within the AfCFTA rules, but not the penalty regime for abuse of transfer pricing rules.
Thank you, Moses. So transfer pricing, abuse of any transfer pricing rules will be handled by the various transfer pricing regulations of the contracting states. AfCFTA rules only applies to the AfCFTA instrument. Thank you so very much. And I think that is about it, our questions from our audience. Thank you for your questions. There's an email that will be sent on, would be posted on this chat box. Any questions that you would come up later with, you can share with us. And any comments and contributions that you would want us to also, you would want to share with us, you can also send it to that email. It will be dropped shortly. So, yes, so back to our discussions, the main discussions. Let me find out, is there any recommendation, I'll start with Micheal, that you would give to a company who would want to take advantage of this AfCFTA deal?
Thank you, Beatrice. I think, as the discussion has actually gone on and all the points have been raised, I think the key takeaway, and I think for us, if it's all said and done, we consider it as successful, is that with the implementation of this, companies will now have to see the flip side or the other aspects of this whole thing on transfer pricing. That is going to be something which will be associated, with the African trade, continental free trade that we are looking at. And therefore, our recommendation is that companies will have to now see this as important as anything else in their decision making and their strategy and their planning, just to make sure that all the key areas that they have definitely will be addressed. And I think that is our key takeaway, that if companies or multinationals and others who definitely roll out business plans, they should also see transfer pricing as one of the key areas that they need to look at. So thank you, Beatrice.
Okay. So Moses, any recommendations?
Okay, thank you, Beatrice. And as has been discussed, we stand to benefit than to lose as Africans, because we have a bigger market. So as multinationals, what I would say is that companies should take advantage of the bigger market that has been created through the AfCFTA instrument, and therefore take advantage of it, expand your businesses, and once you expand the businesses, profitability will be impacted, and once profitability is impacted, the revenue authorities will also get more. So what I will recommend is that, yes, multinationals to take advantage of the opportunities created through AfCFTA and expand your businesses, expand your network, build more capacity. For that matter, at the end of the day, your bottom line will be impacted. The business will grow. And then from the tax authorities' point of view, we've discussed issues around harmonization. The AfCFTA Secretariat is trying to lead in this area, as well as ETAF. So the various revenue authorities has prepared in terms of putting the right systems in place, building capacity, so that as and when there are issues, they are easily addressed to encourage that we benefit from what AfCFTA offer to the African continent, because the bigger the market, the more the opportunities is there to expand the businesses, and out of which the various tax authorities will also get in their fair share. For that matter, multinationals ensure that you have the right documentation in place, as we always say, contemporaneous documentation, so that when the tax authority comes to you, you have the right documentation and operate fairly within the rules from a transfer pricing perspective or the AfCFTA instrument. Fairness, and at the end of the day, both the revenue authorities and the multinationals will benefit from the AfCFTA benefits. Thank you.
So companies are encouraged to expand. AfCFTA has opened a gateway for you to expand and expand your businesses, expand your companies to the various regions of AfCFTA. And as you expand, do not forget, keep solid documentations. Thank you so very much. And all too soon, we've come to the end of our discussions today. Thank you so much for joining, and thank you for your questions. We'll be sending a survey into your email boxes. We'll be sending a survey. We want to know how this session fared. So we would be sending an email and would be grateful you complete it and share with us. Thank you so very much, and see you next month.
There is a popular African proverb that wisely states, "Until the lions have their own historians, the history of the hunt will always glorify the hunter." And there is no better way to demonstrate this than using the following. These are snips from newspapers and other broadcast media around one of the foremost communications companies in Nigeria. And they tell a negative story. In the next screen, you can see a very positive narrative from the same company. It is noteworthy that these screens are only a month apart, with some of the negative reports in March 2022 and the positive reports in April 2022. What changed in just 1 month? Another intriguing story comes from a widely circulated social media image. It led to various interpretations, turning everyone into a tax expert. People were puzzled by how one entity managed to pay more taxes in 1 year than all the banks in Nigeria combined. The real question is whether this is the true picture. How does it impact the public's perception of these entities? What story is conveyed when such information becomes public? Equally important is understanding who is crafting the story and communicating these narratives. This is why we always say that at the end of the matter is that the story is told right all the time. It underscores the need for taking responsibility in communicating your tax affairs and matters, ensuring that your story is always communicated accurately. Tax impact and transparency reporting provides the avenue through which you take personal responsibility for how your tax affairs are communicated to the public, and that your story is told right every time.